All right, welcome everyone. My name is Chris Raleigh. I am the CEO of Harvest Returns, and I'm here today to talk to our investors about our second private credit fund. This is a fixed income alternative. I know there's a lot of news in the private credit world right now that I'm going to address later in the presentation. So I really appreciate your time today, and I look forward to your questions. If you do have a question, we should have time for that after the webinar. And please use the Zoom Q&A button. We'll provide that. Additionally, this webinar is being recorded, so if you would like to rewatch it or share it or that sort of thing, we will send out that link on our private channel to those of you that are here attending. So these are the typical disclaimers. This is a Reg D 506C SEC exempt fund for accredited investors only. If you would like to invest, please visit the Harvest Returns portal. You need to read the offering documents before doing that. There's a link in the chat box if you'd like to see where that is, and we'll provide some more information towards the end on details on how to invest. All right, private credit. Anybody that's turned on Bloomberg or any of the financial channels or read the Wall Street Journal the past month or so have seen some of these headlines that there's a lot of distress right now in these large retail private credit funds. And there's a lot of reasons for that. One, these are very large funds, typically the Blue Owls, the KKRs of the world. They're multi-billion-dollar funds. These are lending in many cases to unsecured or highly leveraged loans into the software and AI industry. There's a lot of exposure in there because the funds are so large. They need to go where the money is flowing, and that's right now where the money is flowing. There's been some issues about liquidity and redemption gates and those sorts of things. And of course, the volatility in the economy right now. So people are scared of this. So if you don't take away anything else from my presentation, I want you to see that none of these things are like our funds. We're completely different on the private credit side. A little bit about myself and our company. I started this company back in 2016 with our co-founder, Austin Manis, and we're both military veterans. I've got a background in technology, commercial real estate investing. I'm a retired Navy officer, done a lot of things, been a lot of places, but we've been doing this for about 10 years, and you can kind of see our numbers involved. And we'll jump into some of these, specifically the private credit returns, but we've done both private equity and private credit, and have done pretty well at it for the past decade almost. So what is this fund? This is a agriculture real estate fund, essentially. So we're providing competitive risk-adjusted income. We'll talk more about that on the slides coming up. And it's diversified across a wide variety of agriculture sectors. So we're talking livestock, specialty crops, row crops, and even agricultural businesses. All are very reliant on the land, and this will be primarily first liens with a loan to value range of 50 to 60%. So nothing too exotic. Basically, we're investing in farmland loans. Why would you consider investing in farmland loans? There's a lot of reasons. One, you're looking at high yield returns, and it's secured by tangible real estate. One of the things that we really like about agriculture is the macroeconomic drivers. First of all, world population continues to grow. It's growing, supposed to peak out in around 2050 at 10 billion, but right now we're at 8 billion. So there's a lot more mouths to be fed. Additionally, as societies become more wealthy, and they are becoming more wealthy over time, they consume more calories, and that's, GLP-1s aside, that's still the long-term trend. So food demand is inelastic. The other thing that's really interesting about farmland is that it's hard to let go of, and I say that the vast majority of farms in the United States are family run. I think it's something like 98%. We talk to farmers just about every day that have had multiple generation farms in their family. they will do anything they can to avoid a foreclosure and letting go of their land. So because these are first liens on real estate, we're really going for that security, and this is a steady, predictable returns with low volatility. Additionally, these are uncorrelated to any sort of public equity, uh, bond markets, and even other alternatives. Agriculture kind of moves to its own beat, but farmland is positively correlated to inflation. There's plenty of studies that show that over the long term. One of the things that we sort of pride ourselves in is our commitment to sustainability. So we're targeting 80%, and where that 80% number came from is over the history of our company, both on the equity and the debt side. I think it's 86% of our investments have been deployed into companies that are doing something sustainable, organic, regenerative. There are some certifications, but behind those numbers, but for the most part, our term for sustainability and regenerative agriculture is anything that's involved in producing food that improves the soil, the watersheds, and the air quality, rather than doing the opposite, which I've seen a lot of people concerned about that in the agriculture. So some of the examples of this are no tilling or reduced tilling. So rather than plowing up the soil every after every crop season, you just let the crops stay there, and those crops break down and regenerate, and that they improve the soil quality. Cover cropping is another thing. Things like clover is planted in between the rows of the crop, and it builds out organic matter in the soil, and it suppresses weeds at the same time. Then there's crop rotation. Instead of growing the same crop every year, you alternate between crops. That just changes the chemicals naturally that are inside the soil, and improves that soil health. Then on the livestock side, we've done a lot of investments in livestock at Harvest Returns. So we're really impressed with the producers on that in livestock that are using rotational grazing. So they allow the cows or sheep or whatever the animal is to intently graze a very small portion of the property, and then using either movable fences or even sort of the smart collars like you might use on a dog. They move the cows around. The cows are trained to do that and move from pasture to pasture and let the pastures rest over time. And then things like organic farming practices. So this is something that this is an impact type of fund if you have a mandate for sustainability. And here we jump into our private credit performance. As I mentioned, we started out doing private equity, and then a couple of years later in 2020, we started focusing on more and more on farm loans. We've done agriculture loans, we've done property loans, we've done operating loans. You name it. This fund is particularly invested into those first liens. So this is what we'd probably consider our safest investment yet. But you can see that, from a volatility standpoint, we've been pretty consistent on the returns. And along those lines, I want to talk a little bit about our first private credit fund. We closed that in May 2023. Before that, we'd done individual loans into SPVs where we'd raised and deployed capital into individual farming loans. But for a variety of reasons, we decided to raise capital into a multi-asset fund back in 23. That fund is fully deployed into 5 loans. We've already had some loans either refinance or rotate in, rotate out. K1s, it's a minor issue unless your CPA is beating down your door. So we kind of pride ourselves on these funds on getting our K1s out as early as possible, so that you and your accounting team can get those taxes in. This fund has paid out consistent quarterly distributions since the first quarter we deployed it, and you can see our 2025 return. And one thing I want to talk about is is the way we deploy the fund. This fund, we will raise capital. We won't deploy it until we're ready. And on the next couple of slides, I'm going to talk about how we actually do that. Here's our team. In addition to myself, Austin, who founded the company, who's now a director, We've got a great investor relations person, Grandel. We will actually answer the phone. If you dial our office, it may go to voicemail, but we will get back to you. We have people. We don't have AIs. We don't have call centers. My team will answer the phone. Excuse me. And then again, Suzanne and Mark, who does our modeling and portfolio construction. Want to point out something on this slide. This is kind of our secret sauce, that Farm Plus Financial logo there in the center. So as I mentioned, on Fund One, we had a challenge. We called capital, and then we thought we were ready to deploy all that money into the fund that we called, and we'd had some loans lined up, and we were underwriting them. And then all of a sudden, a couple of them fell out of underwriting. They just didn't pass our criteria. Because of that, we sort of missed our first year targets. I think we returned 7.5%, something like that, in 2024. And we decided, though, even though we have that, really proprietary deal flow where we get a lot of inquiries every day, we wanted to make sure that never happened again, and that as soon as we call your capital, we're ready to deploy it into a group of loans. So last year, about this time, we built a relationship with Farm Plus Financial. They're a nationwide agriculture real estate lender. They were established in 2008 or 2007, I believe. Very good track record of underwriting loan performance. So we have a letter of intent from Farm Plus Financial to deploy up to $25 million of this fund's loans. So they will be our primary underwriting and origination partner. Really excited to have them on board, and we've already done some transactions with them in Fund One. About that, here we go. So this is where the meat of the presentation is. Target is 25 million we're raising. We're a small fund. I think those of you that are invested in the alternative space know that smaller funds historically outperform larger funds, and that's where we are. But we still pride ourselves in being able to take investors with a smaller check size, or although we will take as large a check as you're willing to provide. With this fund will pay out quarterly cash distributions. One thing to note here, it's a 5-year hold fund. So this is not liquid. This is money that you are willing to deploy and keep working for yourself for 5 years. We have done occasional hardship redemptions, but that's not something that's designed into the fund. And we're targeting that 9 to 10% IRR, which, as you saw from our previous slide, is perfectly achievable given our track record, and 6.5% pref with a split depending on the share class. And that is it for my formal presentation. I like to keep things kind of short and sweet to allow plenty of time for investor questions. I know we've got some rolling in. You can, before I jump on those questions, I'll talk a little bit about our investment process. The first step is to register for our platform. You can click the link, you can scan that on your phone, you can send us an email and we'll send you the link, you can call us. However you want to contact us, we'll get you access to the data room. You'll be able to read the offering documents, and then it's just kind of like a typical investment portal. We'll be able to run the subscription agreements through there, fund your investment, provide the K1s, upload the investor updates. All those sorts of things are accessible via our portal, and it's pretty typical. And again, if you have any questions, we can walk you through that process. We'll take custodial accounts, we'll take individual accounts, we'll take IRAs, we'll take LLCs, entities, you name it. We're pretty much set up to handle multiple types of transactions. All right, I'm going to jump into the investor questions. Again, use that Zoom button if you have any. So the first question is, will this fund take on any debt? So are we going to take on additional leverage to invest in these loans? And the answer is no. Again, we are doing this from a standpoint of risk premium. One thing I failed to mention on that Fund One slide was our Sharpe ratio, 1.99. And if Sharpe ratio is a measure of risk-adjusted return. So if you kind of break that down into tiers, Your tier one is or your lower tier is sort of, anything below 1.0. 1 to 2.0 is high quality, and anything above 2.0 is exceptional institutional quality. So we're right on the verge of that very high Sharpe ratio. Okay. Will the fund target specific states or specific types of agriculture, or are we avoiding any specific states? No, although there are some states that we like for tax reasons and things like that. That mostly applies on the equity side. On the debt side, we're going to go where the underwriting criteria are met and the fund pencils out. And we are chasing diversity in the types of agriculture loans. So we're not dependent on 100% row crops in this one, or specialty crops, or all in California, or all in the Midwest, whatever. We want a little bit of diversity because in any industry that's going to help as we construct our portfolio. All right, we have another question. This one, somebody raised their hand, and I'll ask if you can try to use the Q&A button for your question. If not, we'll be happy to let you speak, but I know a lot of people don't like speaking on the thing. Here's a question. What are your thoughts on Chinese farmland buyers in the latest press release from the Trump administration? Would that impact any of your dealings? So I don't know. I don't have any thoughts in particular. I'm not a big fan of the Chinese owning U.S. farmland. I think that the headlines around that are sort of inflated. It's a very there have been a couple instances, I think, where they purchase farmland maybe near one of our military bases, that sort of thing, and so there's a security risk there. But as far as that impacts our fund and our investments, I would say that's zero risk to us. I will tell you, we will not be lending money to any Chinese farmers on this fund. So I'll make that pledge. Okay. If the fund has loans that pay off early, do you anticipate returning capital or finding new loans? So generally, it depends on when in the life cycle of the fund that happens. So these loans are anywhere between 1 to 2 years. So we will have some cycling in the fund, which is actually good because part of our return is from the origination fees that we take and then we split with our underwriting partner. So that just having churn in the fund just boosts our returns, and we're used to that. One thing we won't do is double down on funds or invest. We're not going to invest capital that's from interest. We're going to return all that to our investors. Okay. What product is in your portfolio and where are they located? So that just depends. Three specific types, or I'll say four specific types of agriculture loans that could be in this portfolio, and in our current portfolio. I'll say that are specialty crops. So that's something like a vineyard, blueberries, something like that. Permanent crops, like a tree crop. So pistachios, we have both pistachios and hazelnut loans in our current portfolio. Row crops is something that we're getting more into, but that's things like soybeans, cotton, wheat, corn, mostly in the Midwest, but also the Mississippi River Delta. And then, of course, livestock. In our current portfolio, we have a number of cattle loans, and we have a private equity investment into a sheep operation. So I'd expect that we have some expertise in all of those, and where we don't, we'll rely on Farm Plus Financial to help us with the underwriting on a specific crop type that we may not be very comfortable with. Okay. What types of reporting will you provide? We'll do quarterly reports. We'll provide financials, updates on the loan portfolio, distribution notices, and then, of course, the annual K1. So sort of your typical types of reporting. All right. I'm going to let somebody come on the microphone and ask a question. So I think that person, if he unmutes, he's welcome to ask his question if he wants. Otherwise, you can use the Q&A button to ask it, or you could send it in the chat as well. All right, I think we got that one answered. So we'll jump into some of these other Q&A chats. Will this fund be making loans only to American businesses? Yes, 100%. This is a American farmland debt fund. When will you deploy the capital that I invest? So we'll call capital. I expect our first close on the fund will be early summer, probably late June. We'll call that capital. Again, we'll have either our own loans or Farm Plus financial loans lined up and ready to deploy, so that those investing in that first close should see their first quarterly distribution in subsequent quarter, either the 1 or 2 quarters afterwards. So we want to make sure you're getting your yield, and the only way you're going to get that yield is if we start putting that money to work. All right, let's see. We've got 1 or 2 more questions, and we have plenty of time for questions. Where are my K1s? So that we post those inside the platform. In an extreme situation, we can email them to you, but we like it to kind of get everybody up on the platform. Here's one. Okay. Will you work with offshore investor entities? Yes, we've taken foreign investors before. We're going to obviously KYC AML everybody, but we can do that. We can, know how to do the Form K3s and all the things that come along with having foreign investors on a cap table. And so that's something that, definitely want to talk to you on an individual basis about that, but we can do it. All right. I'll give it 1 or 2 more moments for questions, but I like to keep this short, but really appreciate your time today. This is a fund we're excited about. We've been working on this for a while. We're happy to have those. I know we got a lot of West Coast folks on the call this afternoon, so glad to have you here. All right. Well, I'm going to go ahead and close out, and I would be happy to talk to any of you, do an individual call. If you want a one-on-one call, you can shoot me an email, info@harvestreturns.com. That'll get to me, and then we'll set up a call at your convenience if you'd like to do it that way. Otherwise, we'd love to see you on the platform. Take your questions however they come in, and we'll send this recording out. Thank you so much for all your time. Have a great afternoon.